Turn now to Tesla. It is the mega cap that was down the most in today's session, down about 8.5% after a report that the robotaxi event that we expected in August, it's not going to be till October. This pullback breaks an 11-day win streak. And on Friday, Guggenheim analyst Jewsikow joined the show and warned about headline risks about this robotaxi event. And Jewsikow joins us now. Well, this isn't as dramatic a move as you might hope, I imagine. Yeah, and I mean you specifically, Ron, because of your sell rating here. But what does it say? And this was the robotaxi event that Elon Musk announced some months ago. It kind of rescued the stock. It was on the decline. He said, oh, we're going to do this event. People got excited. And now it's getting pushed off. Why, do you think?
Yeah, it's a good question. And to be clear, we don't have all the details right now. But I would say the genesis of this event, or at least the genesis from an investor point of view of when this started, was there were reports that the next generation platform was being canceled. And they were scheduling the 8-8 robotaxi event that same day was when the public announcement was made. I think there was skepticism even at that time when we were talking with investors about what they could actually show. But we have entered this almost hype cycle over the last several months ahead of this event, which our view was it did create some risk. It's much easier in our seat not actually allocating capital to say there was risk there. But I think at this point now, Elon's called himself the boy who cried FSD being full self-driving. You do have this unreliable or lack of credibility with the narrator now that's starting to emerge, because even showing a prototype is only the first step of actually commercializing a robotaxi. We think this is 2030 or potentially well beyond 2030 before Tesla has a product in the market. Mm-hmm. It's important to note that Waymo and numerous operators in China, Baidu Apollo being the biggest, have robotaxis operating on the road today.
Now, arguably, it's not like Elon Musk was E.F. Hutton before this. Like we've gotten used to Elon Musk saying, I'm going to show you this thing, or here's what it's going to be. And then it's not exactly that. So maybe we shouldn't expect that this is the beginning of a great tumble for the stock, because I think the shareholders, the people trading Tesla, sort of expect Elon to be Elon. No? What's different about this time, if anything?
No, I think that's fair. I think there's always a willingness, for lack of a better term, to suspend disbelief with some of the promises that are made here. And to be clear, Tesla does have a lot of data advantages. We just think there's questions around, with the legacy fleet, if there's enough inference compute, particularly hardware 3 and earlier, to actually run FSD. And then the whole flywheel of putting the initial Model 3, Model Y vehicles on the robotaxi network is at risk, and showing data to regulators becomes much harder because you don't have actual self-driving or level 4, level 5 testing data to show regulators to give them confidence that this can be commercialized. And yeah, I mean, at the end of the day, it's a fair point, though. The stock, at least from our vantage with a sell rating, never seems to react as negatively to actual negative headlines as it does to positive headlines. But I think today was a step closer to reality, at least for what we see as a very overextended stock.
Okay. I mean, given the fact that the stock is up something like 40% in the past month, expectations of where we go from here, it does seem like there was a lot of short covering that maybe helped fuel the rally we have seen up until today. What's the next, I guess, impetus? What's the next catalyst for this name, whether it's higher or lower?
Yeah, I would say what changed today was, I think 2Q earnings matter more than they did before. There was I would say, almost consensus belief with investors that you couldn't short this stock ahead of the robotaxi event. Now that that's pushed out, I do think the quality of 2Q earnings matters a lot more. Our view is that the delivery upside this quarter was driven by heavy discounting, and that's going to show up in the form of negative gross margins. Makes it look much more like an auto business, and we can get excited about the energy upside, but I feel like that's well captured by our model, and the stock is trading at still 55 to 60 times our 2026 earnings estimates. It's really hard to justify this valuation without robotaxis. So I think earnings will matter more.